Okay, dear students, this is Mustafa Ahmed Mirchawala from Mirchawala Group of Accountancy, your FR trainer. And today we are doing F7 pre-mock final account. And you know, final account is basically the revision of major standards. Okay, so you must have a little grip on accounting standards as well, right? Okay, so now we are moving. Just for your motivation, there are few results. Even in your last class, you have also seen this. So this is for your motivation, a big list of last attempt. So I hope you are doing the same hard work which they did in the last attempt. Okay. So you can see that there is a trial balance in front of you. The following scenario relates to the requirements. The company name is Mervin Company, and yes, the year end is 31st December X8. As we all know, accounting dates are very important for financial reporting purpose. Okay, and yes, you can see the draft profit. They have calculated the draft profit. Okay, so what you have to do is you need to do profit reconciliation. There are many questions of profit reconciliation in your exam kit as well. So this is unadjusted profit, this is unadjusted profit. You will be starting from this profit and then you will be going to the corrected profit. This is the one requirement. And yes, the retained earning, they have given you pure opening. This is opening retained earning, opening retained earning. So why they have given you opening retained earnings? So that you can calculate opening retained earning, add profit after tax less ordinary dividend to get closing retained earning. So closing retained earning we'll be calculating ourselves for the SOFP purpose. Okay, right? Now let's move to the adjustment number one. Adjustment number one. Be careful. It's about the self-constructed asset IS 16. We are constructing asset, our factory, our owner occupied property. Okay, Mervin Company has been constructing a second-hand factory since 1st January X7. 1st January X7 means previous year beginning. This year is X8, this year is December X8. So 1st January X7 means last year beginning. Okay, on 31st August X8 the construction of the factory was completed. Okay, so from this date, the date when the factory is completed and ready for immediate, it was ready for immediate use, we will start depreciation. We will start depreciation from this date. We will start depreciation from this date. Okay, be careful, you know the rules. So 31st August X8, the very next day is September. So September, October, November, December. December is your year end. So we will be depreciating this property only for 4 months. We will be depreciating this property only for 4 months, and don't worry, I'll do it for you. Okay, now at 31st December X7, the carrying amount of the factory under construction was correctly calculated as 8 million. 8 million means 8,000 because already three zeros are written. Already three zeros are written. So 8,000 has already been spent. 8,000 has already been spent on the construction, and definitely it has been capitalized because we are constructing, we are making a non-current asset. So 8,000 already recorded, 8,000 already recorded and as an asset. Okay, regarding this property, now use your brain, use your common sense. This 8,000 must have been included in this. See, this 8,000 is already part of this 36,000. Okay, use your brain because this 8,000 has already been capitalized last year. Now, what new amount spent on the construction? Material, labor and subcontractor 5,000. Yes, it should be capitalized this year. Other directly attributable overheads, yes, it should also be capitalized. But admin overhead, no, admin cost P&L immediately. So admin cost should be booked. Admin cost should be booked immediately in the P&L. But what they have done, all the above cost has been recorded in the factory cost account in the trial balance. So that means they have recorded it as an asset. They have recorded it as an asset, not as an expense. Okay, so now you need to do this correction. When you will do this correction, you will book expense. You will transfer this 500 to P&L. So when you will transfer this 500 to P&L, your profit will go down. So in the profit reconciliation, this will be a negative amount. because you are going to book an extra expense now. Okay, so 500 will be removed from the factory asset cost and it will be deducted as an expense. Okay, I hope you got it. I hope you are active. I hope you are actively looking at the question. So see, this out of this 7500 we need to remove 500 because this 500 is not an asset, and yes, this 500 will hit your profit. This 500 will hit your profit reconciliation. Definitely I'll do it for you. Okay, so let me do a little rough working. I'm just doing rough working because the fair working I'll do on the Excel. So already capitalized last year amount for this factory is 8,000. Then you capitalize 5,000 material labor overhead. Okay, then other directly attributable overheads, it's 2,000. So 8,000 plus 7,000, total 15,000 has been capitalized. Total 15,000 has been capitalized, but don't forget that the asset is completed on 31st August X8. Do remember this date. Okay, now a little bit of IAS 23, a little bit of IAS 23, IAS 23. This is IAS 23. You know, if you have taken loan to buy a qualifying asset, that loan interest will be capitalized, and capitalized means it will be part of PPE. Okay, but till which date? Till the date of construction completion, till the date that qualifying asset has been completed. Okay, once the qualifying asset has been completed, now no further capitalization of interest. Now the remaining interest, the future interest, will go directly in the P&L. Read it carefully and think over it. A specific loan, a specific loan of 18 million was obtained in 2007 to fund the construction of the factory, and it carries an annual interest rate of 10.5%. Be careful. The loan was still outstanding at 31st December X8, no problem. All, see, this is the line. All interest on the loan has been recorded as an interest expense in the profit and loss. This is very wrong. This is very wrong. Why? Listen, let me make complete year for you. This is the complete year. See, January, Feb, March, April, May, June, July, August, September, October, November, December. Okay, so we have taken the loan from the beginning. So yes, January the construction was going on, Feb, March, April, May, June, July, and August. That's it. On 31st August, it is completed. On 31st August, the construction is completed. So once the rules of IS 23. Once the construction is completed, you stop capitalization. Okay, so 8 months you should capitalize, and yes, these 4 months should be gone in P&L. 4 month expense should go in P&L. But now what they have done, they have booked all the interest in P&L. So that's wrong. So that means we need to do correction for these 8 months. We need to do the correction for these 8 months. These 8 months should be capitalized. Capitalized means should be part of PPE. Let me do it for you. How much is the loan? 18 million is the loan. So how we'll be doing it? Capitalization of borrowing cost. I'm just doing rough here. Okay, fair working I'll do on the Excel. This will be 18,000 multiplied by 10.5% per annum into 8 upon 12. 10.5% into 8 upon 12. So this will be I think 1260. Yes, 1260. So this is the amount of total asset. This is the amount of total asset. 8 plus 5 plus 2 is 7. 15 and 1 6 16260. Okay, so the date when this asset is completed, the total capitalized amount should be 16260. the total capitalized amount should be 16260. Okay, nothing difficult. And now this 16260 will be depreciated for next 4 months. This 16260, be confident, please be confident. This 16260 will be capitalized for next 4 months. Okay. Mervin Company depreciate the factory building over 20 years. So this is the life. No entries have been made in respect of the factory in the year ended. Okay, that means no depreciation has been recorded. Now listen, my dear student, respected student, I already told you that the factory is completed and ready for use on August 31st August. So we'll only book 4 months depreciation. We'll only book 4 month depreciation. Let me calculate depreciation for you. It's easy. The value of factory is 16260. See, depreciation for 4 months. So how to calculate it? 16260 divided by your life. You remember the life. The life is 20 years. So this will be per year depreciation into 4 upon 12 into 4 upon 12. So this will be 271 something. Okay. So you can see after depreciation, just 15989. Now few things regarding the profit reconciliation. This depreciation is an expense. An additional expense, already not yet booked, so this depreciation will go in the P&L. This depreciation will go in the P&L and it will reduce your profit. One more thing, remember this 16260, this 1260, they booked complete amount as an expense, all interest. Remember, all interest is an expense, but this 1260 is not expense. This 1260 is asset, not expense. So they deliberately booked it as an expense. So now we need to reverse it. We need to increase the profit because they have booked an extra expense. They have booked an extra expense. Okay. Now, next thing is again a very small concept. The revaluation reserve relates to Mervin Company's head office. See, there is a revaluation reserve. How much is the revaluation reserve? Go relax, relax. The revaluation reserve is 1600. See, the revaluation reserve is 1600. There is already a past previous revaluation reserve. That means there had been some upward revaluation in the past. There had been some upward revaluation in the past. Okay, so they are saying the revaluation reserve relates to Mervin head office at 1st December X8. That means our year, the last month of our accounting period. It was discovered that the head office had been damaged due to storm and resulting in an impairment loss of 2 million. This has been included in the draft profit before tax. And what does it mean? This has been included means they book it as an expense. They booked complete impairment as an expense. They booked complete impairment as an expense. Now let's see whether they have done correct or wrong, and is reflected in the carrying amount of property, plant and equipment. Depreciation on the head office has been calculated and recorded correctly. So don't worry about the head office. Don't worry about the head office depreciation. It is correct. Mervin Company does not make any revaluation surplus to retain earning in relation. So very good. They don't make any entry like revaluation reserve debit, retain earning credit. Now you tell me. You tell me. You even those who have studied from me, they know I teach this thing in IS 16. If there is an upward revaluation first and then downward, up first upward then downward, so whenever there is first upward and then downward, first we always remove the revaluation reserve. First we always remove the revaluation reserve. Okay, so same is the case here. Or let me give you one more summary. Whenever you see any downward revaluation or impairment, whenever you see any downward revaluation or impairment, first of all, always look at the trial balance. Is there any previous revaluation reserve? Is there any previous revaluation reserve for that property? If yes, if there is a previous revaluation reserve for that property, in that case, you need to remove that revaluation reserve. In that case, you need to remove that revaluation reserve first, and then the remaining amount will go in the expense. So let's see how much is the revaluation reserve. It's 1600. So now what entry we should have made? Listen, we should have made this entry first. Listen, PPE obviously going down, so it's credit by 2000. Revaluation reserve debit by 1600, and yes, the other 400 should go in the P&L. But what this stupid guy did, this accountant, he booked complete amount. He booked complete amount in P&L like this. So what do you say now? That means they have booked an extra expense of 1600. They have booked an extra expense of 1600, and because of that extra expense, your profit must have gone down. So now you need to bring your profit up. Now you need to bring your profit up. Let me make the correcting entry, although the entries are not required at all. Although, see, we should have made this entry, we made this. So now the correcting entry will be revaluation reserve debit and P&L credit. Okay, so in the SOFP we'll remove this revaluation reserve. Okay, and this P&L credit means we will increase our profit. We'll increase our profit. Okay, then now this is IS 37 with the in its simplest form. I must say IS 37 in its simplest form. You do this type of thing in F3 level. Mervin Company estimate the provision for warranties based on past experience. The provision for the current period has not yet been calculated or recognized. So current year provision we need to make the year end. The information below has been compiled by management for calculating the required provision. Okay, so these are the units, these are the probabilities, and this is the estimated cost. So I hope you know the EVA, expected value analysis. This is same. So 25,000 multiplied by, this is the probability. So 25,000 multiplied by 15%. Wait, let me calculate. Okay, 3750 units, and multiply by, this is the per defect cost, multiply by 32. it's going to be 120,000 here. Okay, the next one, 1100,000 into 30%. This is going to be 330,000 units. Multiply by the defect rate. So it's going to be 594. Now 594 plus 120, 714,000. Okay, so this is your closing provision. This is your closing provision. This is your closing provision. Okay, now how much is the opening provision? Can anybody see? Yes, this is the opening provision. So opening provision is 5,000. Opening provision is 5,000 and closing is 714. So how much is the increase? Increase is 214. Increase in provision is 214. Increase in provision is 214. Let me calculate it again. Wait. 25,000 into 15% into 32, right? 1100,000. This is not 594, it's 5940000. I missed. You can also check. It's 5940000. 10 is missed. 5940000. So the total will be 6060 000. Okay, 6060 000. And if you remove 30, it will be 6060 only. Okay, so your opening provision is 5,000, closing is 6060. You know the rules. Listen, if you do it with the help of T account, so the opening is 5,000, opening provision is 5,000, and closing is 6060. So how much is the increase? The increase is 1060. This is your expense. This is your additional expense. And if you want to make the double entry, those who love double entry, so the double entry is P&L debit 1060 and provision credit 1060. Now, how to post this? This extra P&L debit, this extra expense will definitely reduce your profit in the profit reconciliation, and the provision credit means your liability will go up. So in the SOFP, you have to increase your liability. In the SOFP, you need to increase your liability. Okay. This part also done. Now the last part, which is IS2 and IS10. IS2 plus IS10. Okay. See, first of all, what is our year end? Our year end is 31st December X8. Our year end is 31st of December X8. Be careful. Okay. In February X9 means 2 months, almost 2 months after the year end. Prior to the financial statements being authorized for issue, Mervin Company determined that some of its inventory produced, see, this is the change, this is the evidence, produced in December X8 had manufacturing defaults. Taking this into account, the total net realizable value of the inventory at 31st December X8 was 6 million. Now tell me, none of the damaged inventory has been sold. Now tell me, this is adjusting event or non-adjusting event? Definitely adjusting event. Why? Although we have discovered the defects in February X9, but these goods were manufactured in December X8. So that means we manufactured default goods in December X8. So it is related to last year. We have evidence that the reason of this decrease in value is existed at the year end. The reason for this decrease in value is existed at the year end. So it's an adjusting event. So we need to adjust it. Okay. Now tell me, this is your NRV, and can you see the cost? Yes, in the C. This is the cost. So cost is 8620 and NRV is 6 million. Cost of inventory is 8620. NRV is 6000. So you remember inventory should be recorded at lower of. So we'll record it here. So how much is the write down? How much is the write down expense? How much is the write down expense? Is 2620 is the write down expense. Okay. So this is the expense. If you want to make an entry, in short, it will be P&L debit, or if you are very genius, so cost of sales debit 2620 and inventory credit. Okay, 2620. So how to post this? How to post this? This expense will definitely reduce your profit in the profit reconciliation working. This expense will definitely reduce your profit in the profit reconciliation working. And yes, at the year end, you will reduce inventory by 2620. So it was already it was 8620. You will subtract 2620, and at the year end you will report it at 6000. In the SOFP you will report it at 6000. These all are basic adjustment, my dear student. You have done many things. You have done more advanced things than this. Now listen. See, did you pick the evidence? It is written produced in December X8. This is the best evidence that the reason of this loss existed last year. Now they are asking a 3 mark theory requirement. Let me guide you and you can write it easily. Explain how the discovery of inventory defects would affect the financial statement of Mervin at 31st December X8. So first of all, you need to write IS10, the name of IS10. Then you need to write the definitions of both adjusting and non-adjusting event, which you already know. You have your books, you have your notes, everything. So IS10, then two definitions, adjusting events and non-adjusting event definitions, and now then you need to connect with the question. Then you have to say that although the defects are discovered after the year end, but the reason of the defects existed at the year end. Why? Because it is written they are produced in December X8. So that's why it's an adjusting event. So this loss should be adjusted last year. Okay, and what we are doing right now. Okay, so these 3 marks you need to write. Now, my dear student, I have discussed the question with you. Now I'm going to shift myself to the Excel part, because definitely we need to solve it on the software or Excel. So first requirement, read the B and C. These two part we'll be doing on the Excel. Prepare a schedule of adjustment to the draft profit and loss listed in the trial balance, taking into account of the additional information in notes. Okay. So what we have to do, we have to adjust the profit, and we need to write all the adjustments things. Okay, so first of all we need to correct the profit, and then prepare the statement of financial position. We need to prepare SOFP. We need to prepare SOFP. Okay, so these two things we need to do, but for that I would request you, because now I'm going to shift on to the Excel, so you won't be able to see the question, so better take the picture of the question. Okay, let me show you the question. First of all, wait, take the pic of this trial balance. Take the pic of this trial balance. This is very important, otherwise you will have problems. Then this is adjustment number one. Your wish if you want to take the picture of adjustment number one. uh, I would recommend you to do it softly. If you have the question, you can do it. I also have my question on the other screen. Then these are the adjustments. If you want to take the picture of adjustments, you are free to take. Then these are the little adjustments done by me. Obviously, if you want to take the picture of these as well, see this depreciation. This is the error of impairment error. Then this is the provision thing. And this is the NRV write down. Okay. So now let's move to the Excel part. Okay. So this is the Excel file. Definitely, just to save our time, I have written already the headings. Now first let me do the workings for you. Let me do this working. So first thing is factory. Already capitalized development cost was 8,000, you know. Okay. Then how much was the material, labor and subcontractor cost during the year was 5,000. This should also be capitalized. Then other directly attributable cost was 2,000. And yes, no administrative overhead. Administrative overhead should go directly in the P&L, so write 0 here. And now remember the borrowing cost. Borrowing cost of first 8 months should be capitalized. It was 1260. It was 1260. So how much is the carrying amount? Remember we calculated this 16260 in the working which we were doing. Now this 16260 should be depreciated for next 4 months. Next 4 months. Why? Because the project was completed on 31st August X8 and ready for use. So from after 31st August, it's September, October, November and December. So carrying amount is this same. And now let's calculate the depreciation. The depreciation is 16260. This number divided by 20 multiply by 4 upon 12, 271. Okay. So now what will be the carrying amount? It should be this less this. Okay, 15989. So this 271 depreciation, listen, out of whatever you are seeing on the screen, what things will hit the profit? 271 is your depreciation. It should definitely hit the profit. It will reduce the profit. And this was an error. This borrowing cost, they deliberately booked as an expense. In reality, it was an asset. So 1260 will reverse, will increase your profit. 1260 will increase your profit. Okay. So this working I have already done with you. Then remember the provision opening balance. The provision opening balance was 5,000 from the trial balance, and the provision closing balance was 6060. 6060. Remember? So how much is the difference from 5,000 to 6060? This minus this 1060 is your expense. I have even showed you the T account for this. Then inventory, write down the carrying amount was 8. Wait, it was 8620 already. Now NRV was 6,000. So write down is this minus this. Okay, 2620 is the write down, which is the expense. Okay. So my dear student, I have done all the relevant workings for you. I have just done all the relevant workings for you. Now let's do the profit reconciliation thing first. See, this is the profit. Draft profit. How much is the draft profit? The draft profit in the trial balance, go and see the picture. The draft profit is 4,500. Okay. Now admin cost, remember they have mistakenly recorded admin cost as an asset. In reality it is an expense, so reduce it by 500. Now capitalization of borrowing costs, wrongly they recorded as an expense, but it is an asset, so let's reverse. Let's increase the profit. Depreciation was 271 if I'm not wrong. Yes. Then reversal of impairment loss, remember reversal of impairment loss of 1600. They booked an extra expense of 1600. Then movement in provision was 1060. We just did 1060. Then finally write down of inventories 2620. Okay, let's calculate the revised profit. So that's the 8 marks requirement done. 8 mark requirement done. Okay, now let's do this. Profit will definitely go in the retained earning. Now let's do SOFP. For SOFP, you must have a little brain. Okay, wait, let me do the property, plant and equipment thing first. Property, plant and equipment thing. Go in the trial balance first, all of you. Go in the trial balance. The trial balance already it's a 36,000 pp in the trial balance. Now this 36,000, in this 36,000 already 8,000 is included of previous year of construction. Okay, but now what extra things we have added? What extra thing? 5,000 of material this year plus 2,000 of direct overheads. Then we have plus 1260 of capitalized borrowing costs, and there is some extra depreciation of 271. See, there is some extra depreciation of 271. Can anybody calculate this? Yes, we can do it. Plus 1260 minus 271. Okay. Oh. Wait. Okay. So let's do it here in the formula. Equal 36,000 plus 7,000 plus 1260 minus 271. 43989. 43989 is your non-current asset. Okay, then inventory, definitely 8620 was the original inventory and now we reduced it by 2620. So definitely it will come down to NRV, definitely, because the lower was NRV. Trade receivable will come as it is, no adjustment. Trade receivables will come as it is without any adjustment. It is 11020. It's 11020. Cash will also come without any adjustment, which is 33030. 33030. Okay, so let's calculate the total assets finally. 94039. 94039. Just there is a little hard work needed in the property, plant and equipment, little brain. I added C 5,000, 2,000, and then 1260 and then deduct 271. Why did not I added 8,000? Because 8,000 belong to previous year, so it is already recorded in the 36,000. It has already been added in 36,000. Now let's see the share capital. Definitely it's ready-made share capital of 10,000. But yes, one thing we need to work hard, and that is retained earnings. See, for retained earning, what is the opening retain? Go and check the opening retained earning in the trial balance. It's 55740. 55740 plus. Now what is the updated profit? Today we calculated the updated profit of 2909. So you know the rules. Opening retained earning, add profit after tax, which is here, and then less ordinary dividend. Go and see the trial balance. Go and see. You have the pick of the question. Less ordinary dividends are 7240. And you know, ordinary dividends are not already deducted from retained earning because it is given separately on the trial balance. Let me say in Urdu. अगर कोई चीज ट्रायल बैलेंस में सेपरेटली गिवन है ना तो वो ऑलरेडी लेस नहीं हुई हुई रिटेन अर्निंग से. ओके, तो as dividends are given separately on the trial balance, that means it has not yet already deducted. So let's see what's the answer. 55740 equal 55740 plus 2909 minus 7240. Okay, then we have revaluation reserve. Very easy, very easy. Revaluation reserve was already it was 1600, and yes, we removed complete 1600. Okay, remember in the reversal, in the impairment entry, we used all revaluation reserve. So the total came out to be 61409. Then we have non-current liabilities will come as it is 19890. No adjustment. Yes, provision for warranties, a little adjustment is needed. So it was already 5000 plus this year we increase it by 1060, so it will be definitely 6060. Current tax payable ready-made picked from the question 2800. Then trade payable ready-made 3880. Let's add these three. It will be 12740. Now total equities will be equal to this plus this plus this 94039. So finally we balance our balance sheet. Our balance sheet is balanced. Our balance SOFP is balanced. You can see. Okay, let me see this. Complete SOFP is here. Complete SOFP is here. And your complete income statement. So our question is done. Our question is done. My dear student, be confident. It's not difficult. You have taken all the classes. You have read the articles. You have done revision days. You did study hub. You practiced on the software. Last 40 marks. I highly recommend you to practice on software. So don't worry. I'm expecting good results from you, and if you like this class, please comment on my YouTube channel the feedback, and also share these classes with your friends. Also subscribe my channel. Thank you. Take care. Bye bye.